Hello and welcome to this IA briefing. My name is Reem Ibrahim and I'm the Communications Manager and Linda Whetstone Scholar here at the Institute of Economic Affairs. Today I'm delighted to be joined by Jamie Legg, our Digital Productions Manager. Today Reform UK have issued a statement issuing their intent to enact the Crypto Asset and Digital Finance Bill. So Jamie, we're going to talk a little bit about this, but first of all, could you tell me what is cryptocurrency?
What is cryptocurrency? Yeah, it's usually a big question and can be quite complex. But in short, we'll start with kind of Bitcoin. It is a decentralized digital currency without a sole kind of single issuancer. So the protocol, it was kind of released, coming on 15 years ago. Just started off kind of these rogue messaging, digital asset kind of forums, and slowly has like kind of grown and grown. There's, the miners that people might have heard of, and then nodes where people, process the transactions. And this network is, so large now and it's decentralized because it's got all of these different computers and nodes and miners. So yeah, there's not one issuancer, and the kind of monetary policy of it is set in stone in the protocol. So people are like, oh, why don't they just mine more? Well, it's set in the protocol. You can't change that as unless everybody on the kind of network comes to a consensus. But yeah, so it's like the first digital commodity or digital asset or property. Yeah.
And how is that different to fiat currencies, money that is issued by a central bank like the Bank of England? How does that differ to cryptocurrency?
So cryptocurrencies and Bitcoin differ from normal kind of fiat currency because, as you said, normal fiat currencies are issued by central banks, and it gives them kind of control over monetary policy and stuff like that. And it's basically, if you think about it, it's just a centralized, centralized cabal of people that manage, probably the most important thing in society, which is the currency. So Bitcoin differs with that by, like I said, there's not being a sole single issuancer. The general kind of thesis of Bitcoin and cryptocurrencies is that, there is a set supply. The monetary policy is set. It's transparent. Everybody knows that there'll only be 21 million. Whereas, central banks, you don't know how much is going to be printed. All you know is that there is going to be more and more currency debasement. If you look over the last, few years, even from since COVID, I think something crazy like, over half of the dollars that were in existence were actually created within the space of 2 years in response to COVID.
And how does cryptocurrency as a concept sort of align with classical liberal ideas?
Yeah, so as a concept, it aligns, I guess you'd say, as kind of a match made in heaven. It's very, very anti-central bank. It wants the free market to decide, the price, and basically a free market of money. Quite well, as you're probably thinking, denationalization of money from Hayek that we published here at the IA back in, I think, the 70s, that they're, just like money, just like language and fashion or whatever, currency, should be, it forms, naturally and spontaneously. Gold for a long time has been the standard, and that, became the case over thousands of years of, the scarcity element, and the fungibility. Bitcoin and cryptocurrencies, a lot of the time people say that, it's just the next step in money because it's got all the qualities of gold, it's scarcity, fungibility. But actually it's even better because it's programmable, it's digital. There'll only be 21 million. So, many people who are in the space see this as like, the future of money and finance. Because in the 90s and the noughties we had, internet completely radically changed multiple sectors, where it's like Uber with driving or Airbnb with hotels and stuff. They say, we've got this, innovation with the internet with all these different sectors, but we barely really had that with, finance. We still use the same kind of rails that we used back in the 80s. Now, obviously, you've got a lot better kind of payments with Visa and stuff, but there hasn't been any innovation, and many people see cryptocurrency and Bitcoin as that next step in, I guess you'd say, the market of the internet and finance.
That's really interesting. And in terms of the policy space, I don't know much about what the girls, that question again. In terms of the policy space, how does the UK compare to other countries?
So good question. In the kind of crypto regulatory framework, the UK ranks kind of in the middle. I'm not going to come here and say that we're absolutely awful and very, very uncompetitive. So, there have been good initiatives from like the previous government that give some kind of regulatory clarity, because that's been like the main issue, especially like in the States. The Security Exchange Commission didn't really give out any kind of clear guidance on what were securities and what were commodities. They basically just go after people once they had already started a new cryptocurrency or project. But the UK, we are kind of in the middle. The EU has, as always, raced to the front with regulations. It's got the most substantial and kind of overarching, and every European Union country has to align with it. But in the UK, we've got lots and lots of startups and actually cryptocurrency companies here. But there still isn't very clear regulatory clarity, and it's an ongoing spontaneous thing when it comes to NFTs and other kind of products like digital assets and DeFi. It is regulatory wise, Bitcoin and Ethereum is seen as kind of property. If you sell or trade Bitcoin or Ethereum, that is seen as you realizing those gains, and you're subject to capital gains tax. But we do have very high capital gains taxes now, 24%, which has been put in place by the new government. So we're not very competitive on that side. So we're really kind of waiting for a government government to really kind of take the horns of this and drive a very, very clear regulatory framework.
And let's look at what reform are proposing in this crypto assets and digital finance bill. They are saying that the bill sets out to sort of look at the post-Brexit arrangements. And as you said, I mean, the fact that the European Union itself has pretty stringent regulations on cryptocurrency, perhaps we would then be able to sort of reap a lot of those opportunities and actually be able to diverge from the European Union's regulatory framework. So I'm just going to read out from the document. They've said they want a 10% capital gains tax on crypto. So, a single capital gains tax will apply to all cryptocurrencies and eligible blockchain-based digital assets, and that will override the existing tax system. In sort of the intention there being to allow a tax-free allowance for chargeable gains as well. A 2-year regulatory sandbox, which I think is particularly interesting. So the FCA, with Her Majesty's Treasury, would then run a 2-year blockchain financial services sandbox, which would be open to financial institutions and designated firms, sort of granting them temporary relief. So I think the idea behind that is to allow them time to make mistakes and allow them that period of time. Banking non-discrimination duty, sovereign Bitcoin reserve fund, paying taxes in cryptocurrency specifically, and the sixth point is rapid policymaking timeline. So thinking about the way in which cryptocurrency is currently limited to 90 days, actually allowing or preventing the kind of bureaucratic draft and keeping the UK well ahead of the European Union. So it, of course, aligns a lot with trying to diverge from the European Union's regulatory framework. There is a lot in there, and of course, we don't have all of the time to really dig into the detail. But what are your initial thoughts, initial reactions to this?
Initial reactions is, generally really quite positive. It's them signalling, quite substantially that that's what they want to be very, very pro-crypto. I guess it covers it because I think like 1 in 5 people in the UK, under the age of 35 hold cryptocurrency assets of some sort. So, politically wise, they're kind of going after younger voters and stuff. But the regulatory sandbox is interesting, and it's been tried. It's used often, regulatory sandboxes, whether it's fintech or other sectors. And like you said, it's for, I guess you'd be able to, it's probably a bad description, but like move fast and break things. So you've got that kind of feedback loop of actually what is working, what isn't. So, that's very positive. The capital gains, I think, is very, very good. There are other countries where it's a 0% tax on capital gains. I believe in Germany it's after 1 year. If you hold it for 1 year, you don't have to pay capital gains. Portugal, as a part of their, I guess, digital nomad visa program, I believe you don't have to pay any taxes on crypto for that. But going from 24% to 10% would be, significant. I guess coupling that with having very clear clear regulatory framework would be very beneficial. And like I said, there's already loads of companies and startups in the crypto space in the UK, and I guess it's just ensuring that they stay. So there's that. The strategic Bitcoin reserve again is it's the big thing at the moment. Trump's kind of put one in place. With Trump's, it's at the moment, I think they have something like a few 100,000 Bitcoin that they've acquired through, seizing it from criminal offenses, cases and whatnot. It's not clear in the document that Reform have posted on their policy, whether it will be down to us, the government literally using taxpayers' money to buy Bitcoin, which even though I'm, very pro Bitcoin, I'm not sure is actually intellectually sound or morally correct. And we're not sure if it will be, just that we keep the Bitcoin that we acquire through, nefarious acts of criminality or other cases. The jury's still out on that. But it's altogether, I think it should be seen collectively as just across the world, there seems to be this new wave now of politicians that are actually kind of accepting that, this is here to stay. This is a new technology that we likely need to embrace so that we are competitive internationally. It's just like you'd want to stay competitive in normal financial markets, which, we haven't fully seen since Brexit. This is the new kind of financial frontier for people under 35 and stuff. They'll just become so used to it. But, it's still a very kind of young sector. It's only been around 15 years and only really in the last few years has been taken up on the corporate level or government level. Then there was the element, I believe, of you can pay taxes.
Yeah, paying tax. I mean, some of the headlines that have come out of these announcements have been around Reform UK now accepting cryptocurrency. So I think they're accepting Bitcoin and Ethereum for donations to the party, and they're saying that this is sort of part of their broader approach. We should be accepting cryptocurrencies as a new technology, and that should also include being able to pay your tax bill through cryptocurrencies.
From my knowledge of people, unless they're really, really involved in the Bitcoin space or cryptocurrencies, they don't really spend it because they feel like, it is something to own whilst the currency is being debased and, inflation needs of that. So, and also the element of it's a developing market and is expected to be in the tens of trillions, in a few years. Paying your taxes in it, well, again, we kind of touched upon when you transact that to the tax man, that should be, you're subject to capital gains. So I can't see, people actually paying their taxes in it. I guess it's a good signal, the government open to receiving those assets. And actually, to be fair, maybe that is how they see building the reserve. But yeah, I don't think it's massive. It's not a game changer. I'm not going to be out paying my taxes in Bitcoin or anything. But, like I said, it's all moving in the right direction.
Yeah.
Domestically and, internationally.
Yeah, that's really interesting. In an ideal world, what would the kind of regulatory framework and tax system look like for somebody that is avid in the cryptocurrency space? It's interesting. I mean, I think with some of these particular policies that Reform have promised, things like reducing capital gains tax 10% for cryptocurrencies. There is the argument that it could, to play devil's advocate here, distort the market in a way that it sort of prioritizes or makes cryptocurrencies more, or digital assets more attractive than other like traditional assets. Of course, I would rather see capital gains tax reduce overall for everything and not just cryptocurrencies. The more that you single out certain things, the more complex it gets. But what kind of ideal system would you like to see?
What I'd like to see ideally from the government, and I think many people in this space would agree, is just clear clarity. Right now, like I said, our regulatory system isn't massively burdensome. We're not massively heavy-handed, but there's areas regarding like NFTs and decentralized finance, which I'm not going to go into too detail, but it's another kind of frontier of innovation created on these other cryptocurrency layer one cryptocurrency networks, where it allows people to stake certain tokens in a pool, and the whole kind of mechanism of that is again processed on a dispersed network of computers. So there's not one issuance or one person managing that, I guess you'd say, that collection of tokens and stuff. So people can get interest, and there's no one central place to turn off this market. So yeah, just clarity from the government, but with light touch. We want to be competitive to Singapore, who are very, very good with cryptocurrency regulations, I believe. America were very, very bad, but they're better now with the Trump administration, and I believe they have David Sachs, who is a kind of tech entrepreneur who's actually in charge of the cryptocurrency kind of legislation that's coming in. So yeah, on the community side, 0% capital gains. Obviously, I think that would be ideal to incentivize individuals to come here. But then, yeah, more clarity. Don't want to be as heavy-handed as the EU, because same with other finance issues regarding like MiFID, with financial organizations or banks needing by law to have a certain amount of capital in funds. This hollows out any kind of competitive new upcoming businesses, and it's the same with cryptocurrency. And I want to stay away from the EU kind of model of that, because yes, there's lots of big kind of cryptocurrency companies in the UK that could probably do all the kind of paperwork and the legal side of it. But if there's a cryptocurrency kind of starter, which is exactly what we need in the UK, you don't want them to be shoved out the market because of overdue regulations.
Regulations, I mean, this is the case in so many different sectors, but often larger companies, larger industries, they're able to absorb those regulatory costs.
Yeah, exactly.
Smaller entrants aren't able to, because it's so much more costly. And I would like to talk a little bit about the US situation. So you mentioned that the things in the US were particularly bad when it came to crypto regulation, but now things have moved in a bit more a positive direction under the Trump administration. And you mentioned David Sachs, who is sort of looking at the legislation that is going to override a lot of it when it comes to cryptocurrency. Can you talk me through what's going on over in the US and what you think is going well?
Yes, so it was in most prevalently in the news probably like a couple of months ago. But in short, over the last, especially the Biden administration, the Securities and Exchange Commission, SEC, really almost on purposely didn't give any regulatory clarity to what are securities and what is a commodity. Bitcoin is a commodity because of its vast decentralized nature compared to all other cryptocurrency projects. Everything else except from Bitcoin is seen as cryptocurrency projects. They've got teams, they've got people that are in charge of it. It's decentralized somewhat because you've got those dispersed kind of nodes and computers, but at the end of the day there still is this tech team So they're almost seen as like, I guess you'd say, tech startups. But there was no clarity on what was a commodity or what was a security. And when there was any attempt to get regulatory clarity from people within the industry, the SEC just wouldn't give it. And basically, hey, a company like Coinbase, which is an exchange, cryptocurrency exchange, released like kind of like new products, but then would get hit with getting sued or whatnot. So it was always reactive instead of just setting the roadmap.
I mean, okay, what's allowed and what isn't allowed.
Yeah. Now they're trying to get rid of that, confusion, David taxes. So that, is positive. I don't believe that they're actually reducing capital gains on any cryptocurrencies at the moment. But as you may have heard, there's the cryptocurrency, the Bitcoin strategic reserve. Trump, who has put in a Bitcoin strategic reserve, there's many states, actually, individual states, that are trying to get Bitcoin strategic reserves as well. So not just on the federal level, but on the state level. Again, it's just this general wave of optimism and, positive direction of the space being kind of recognized as a legitimate, I guess you'd say, financial sector. So.
Well, it seems like things are certainly moving in the right direction globally, and I suppose it's certainly positive that we now have policymakers in the House of Commons that are supportive and embracing cryptocurrencies.
Yeah, no, it's very positive. And I will just say I've seen the Bitcoin Policy Network UK, who, create policy and whatnot to advocate Bitcoin. And they sent a letter to the government asking to, think about starting a Bitcoin strategic reserve. And they got a reply of that they definitely weren't going to be looking into that, and it was kind of brushed off pretty swiftly. So right now the current government, I really don't think has any intuition or attempt to do it. But again, as the years go by and the market grows, it will become more and more of a sticking point, especially that millennials and Gen Z all own cryptocurrencies. Not all, but will. So
amazing. Well, Jamie, thank you so much for joining me today, and thank you to all of you for watching and listening. If you're interested in learning more about the IEA's work, then do consider becoming a subscriber at insider.iea.org.uk.